Okay, hello and welcome everyone. I'm Jason Jumper from MSDynamicsWorld.com, and thanks for joining us for today's Dynamics AX educational event presented by I.B.I.S. Today we're joined by Joe Morris, a principal consultant at I.B.I.S. and a new presenter for us. It's great to have him with us. And to get today's event started, we do have a quick poll to run. I'm going to open that up now just as we get started to hopefully learn a little more about you in the audience. We'll be showing those results shortly. And please know that we also invite you to add your feedback and ask questions today during the presentation. You can use the Q&A panel that you should see to the right of the window to ask questions of Joe. And without further delay, I'm going to hand things over to Joe Morris. Joe. Joe, do we have you on the line?
Yeah, hold on.
Joe, I think you're back on mute.
Can you hear me?
We can hear you.
Okay, very good. Had to find that right button there. Hello, everyone. Glad you all made some time for this webinar. It's hard to believe we're talking year-end closing again. It seems like we just had this conversation just yesterday, and we're already talking about it again. So welcome everybody to this. And what we're going to be talking about is how to do a year-end closing. And it's not so much, I can't say it's really a how-to as more of a good checklist for you to go through to do your year-end closing. So I've known a lot of people that have gone through this process. They've developed their own process based off of information that we've provided. So hopefully this will be a good tool for you to be able to use it into the future. So again, we're going to be covering the year-end process. So just a little background on myself here. So you get there. My name is Joe Morris. I am a CPA. I spent about a little over 8 years in public accounting. I've been doing this type of work for the last 18 years or so. So been doing this for a little while, and been working with GP, AX for actually over the last 18 years. So just a little background on myself there. Now a little background on the host of this educational series and the company I work for. I.B.I.S, which is a Sonata software company, is a Microsoft Gold partner focused on Dynamics AX and CRM. Now I.B.I.S has been in business for 27 years, and really our strength is in the supply chain space, and we are really focused on client care and services. So that's just a little background on I.B.I.S and myself. So now we'll get into what our objective is in this webinar. Our objective is just as a little checklist. And the first part of this is run financial statements, namely management reporter. And this is just something to help you in your planning process. So we'll have a short discussion about that. The next step in this process will be to open a new fiscal year, and I would say by January 14th, if you're live on AX, you probably have already done this process. Then we're going to verify our closing options and our setup. We're going to talk about a step on cleaning up those AR transactions, AP transactions, just a little tip that I have for doing that, especially if you're doing it in mass. But it's a good checklist of that process you need to go through at year end. I talk about posting all of our transactions, namely all of our invoices, packing slip updated, and then invoicing, PO invoice match, our recurring entries, or what we call periodic entries, and then our accrual. So we're going to talk through that. Just talk about foreign currency revaluations, talk through inventory close, reconciling accounts, and then we're going to actually talk about this little process called our closing process. And what trips a lot of people up on this one is that we call it the closing process, but AX calls it our open transaction process. So we'll go through that and then talk about just the final little processes that we have in our closing out the year. So that's what we're going to try to accomplish. So the first step we go through with, typically I recommend, and the reason I do this is because I'm finding that some of the tools that people are using may need to be built out a little bit more. And the purpose of having a good set of financial statements is for your year-end planning. So this is typically a December process, or you probably should be thinking about it now for next year. But this is a process that you should go through in December or the month before your year-end. Is one of the differences I've seen with good year-end planning process and a more difficult process. So it's really important to have a strong set of financial statements to support your year-end process. Management Reporter is one of the most widely used applications. It's a tool that we use a lot of. And just as a example, I'm going to be going back and forth between my slide deck and AX. So let's take a look at Management Reporter here. And so typically what you're going to do is you're going to run a balance sheet or a income statement to compare your balances to your current year versus your prior year balances. So this is a balance sheet that we have here. This is a great tool for looking at your balances. Gives you the drill down capabilities to look into any significant variances between the current year and the prior year. And again, a good process to go through before you hit your year end so you can evaluate and do your year end planning. Another great tool would be to run an income statement. So here, and you'll have to humor me a little bit because we're looking at this with demo data. So this is 2012 demo data. But you see the point. So in this case, I'm looking at December current year, December prior year, and it gives me the ability to look in to see where do we have significant differences and start that evaluation early in the process. Additionally, with Management Reporter, one of the great things about it is that if you're using the tax posting layer, so say for instance you're doing fixed assets and you're using makers for your tax depreciation and you have a tax adjustment, you can create that adjustment at the tax layer and then show that within Management Reporter. So you can add an attribute to Management Reporter in your column layout to be able to show those adjustments. So it's great for tax planning to show tax results versus operating results. So highly recommend that you go through that process to review your year-end financial statements. So back to our slide deck. So again, financial statements are key. So now what we're going to do is talk about opening a new fiscal year. And it looks like a lot of people have, well, let's see. I want to look at the poll here. I'll come back to that. So by now you should have, if you're on AX and you're live, by now you should have opened up a new fiscal year in the fiscal calendar. So where you're going to go, in the slide deck you're going to get a copy of this. So where you're going to go is General Ledger, Setup, Fiscal Calendar. You'll select the fiscal calendar that you're currently using in your ledger and then select New Year. And then what I really recommend is that you repeat that for each fiscal calendar. And the reason you do that is because you can have multiple fiscal calendars. You can switch between fiscal calendars for reporting purposes. So it's a good idea once you update one calendar, you update them all. So back to AX, let's take a look at that. So I'm within AX here, and I go to fiscal calendars. And here I would just select fiscal year. I know that's my fiscal period, and I can double check that by going to my ledger here in the setup. So I'm in General Ledger area page under setup. I select my ledger, and I see that my fiscal calendar is fiscal. So I can right click, choose view details and see that fiscal year is my fiscal, is the one that's being used in my ledger. So in order to create a new one, let's see what we have in place there. We have a whole bunch of them in there. I'll create one for 2018. So create a new fiscal year. We just let it accept the defaults, and we let our length of period be months. If you're using days for reporting purposes, you can certainly create that. And then click Create. There we go. And then it'll go ahead and create that that new fiscal period for us. That took a little while. That's in our demo environment. So now we have a brand new fiscal period set up. It's really that easy to set up. And we'll cover what you'll need to do with each one of these periods as we hit the end of this webinar. So that's creating a new fiscal period. So now that you have that in place, what you need to do after you do that, and we'll cover this at the end as well, is after you create that, you'll need to put all those periods on hold. So, you know, when you initially create that, all the periods are open. You definitely don't want to put them to close, but you'll want to put them on hold. So that will be a critical step in your process. The next part of this is the setup for the year-end closing. So this is a very critical part of your closing, is you need to be very aware of these settings. Be very aware of these settings. So where you're going to want to go for this is in the general ledger setup, general ledger parameters. Within the general ledger parameters, you have a section in there for the fiscal year-end close. And I'm giving you the slide deck, so this will explain each one of these, and then our recommendation for how you should have that set up. So now if I go back to AX, take a look at it. Let's walk through that. So this is an important part that you're going to need to understand for your setup. So I'm in General Ledger. I'm in Setup, General Ledger Parameters. So I'm within the Ledger section here, and I go down to the fiscal year-end close. And the way you have this, the way I have this here is probably the best way to set this up. So delete close a year's transactions during transfer. This function is specific to rerunning the opening balance job. That is the purpose of this. If this box is checked, the existing year-end transactions will be deleted and a new transaction will be created when you rerun the open entry process. So if the box is unchecked, it will create adjusting entries. So you'll get your initial open transaction, and then any new process that you run, the net difference between the first closing and subsequent closings will be posted as adjustments. So you'll see your original closing entry, or actually I should say open entry, and the adjustments to the original entry. So we recommend that box be checked. As a side note, I don't know if that is the best practice, but it is the easiest practice. It's one that you'll have to make as an organization, what's going to be the best way to run this. And I'm going to say this several times, that one of the great things about AX is you can run that open transaction process as many times as you want. So if you're wanting to run it in middle of January and then again at the end of January, you can certainly do that. But how this box is checked will determine how you'll see those transactions in your ledger. The next box is create closing transactions during transfer. And we recommend that it be unchecked. And your open transactions are always going to be created, but what it does is it creates a closing entry to zero out all your balances at the end of the year. So if you're running Management Reporter, you're still good. You can see those, but it can create some problems as you're running some reports. Let me just put it this way. I have not really seen a good reason to have that box checked yet, but it certainly is not going to hurt you if you do have it checked. It's that when you run your trial balance, you're going to see that closing entry and you're going to see your closing balances at 0. So that means you'll probably need to use Management Reporter as your tool to look at the trial balance. The next one would be set your fiscal year status to close. Not only do we recommend that you uncheck that box, we think you're going to run into a lot of problems if you have that box checked. And what that means is if you check that box, it takes that prior year fiscal period and it sets all those periods to close, which you don't want. Once you close a period, you're calling me, you're calling I.B.I.S help desk to run some scripts to reopen those periods, and it's kind of a problem. So we recommend that it's unchecked because there's really not a compelling reason to have those boxes closed when you do that year end. Typically, you go in and manually close it after you've done your audit and you've posted all of your audit entries and you want to lock down that period. That's when you close it. So really recommend that you have that box unchecked. Voucher number must be filled in. We recommend that you check that box to put in a specific voucher number for that closing. So again, really highly recommend that that those be your settings for the general ledger parameters. So the next thing we want to talk about is what we call account cleanup. So great time of the year to write off all of those AR transactions, AP transactions where you have some of the $5, $10 outstanding balances on your customer ledger or your vendor ledger that you just need to go ahead and write them off. And typically it is a fourth quarter Q4 activity, but should be completed as part of your year-end process. And really where you're going to be going is, there's several ways to write those off, but I'm going to show you a little trick to do that in mass. And where you're going to go is accounts receivable journals, and you're going to go to your payment journal to do this. And I'm giving you the process here. So let's go back and look at AX. You can also use collections management to write those off. So let's just go into accounts receivable. I'm going to go to the payment journal. And I'm going to create a brand new payment journal. And typically if you're doing it this way, you may want to have a journal name set up as write-off. That's typically the best way to do that. So what you're going to do is go ahead and click on lines. And once you're in here, what you're going to do is go to payment proposal, just like what you would be doing with a vendor. So you have the same process on the customer side as well. So we're going to create a payment proposal. And all this information in here, you just let alone. But what you're going to do is go to select. And what we're going to do is give it an amount that any transaction under this amount we want to see. So we'll go ahead and look at the setup on that one. So we're basically selecting customer transactions. Our table is customer transactions, and our amount is less than 25. So with that, we're saying any transaction under 25, I want to take a look at it because I may just want to write that off. So I'm going to click OK here. I'm going to click OK, and let's just see what, we probably already have some out there. Let's take a look. Yep. So this is what, I'm going to go ahead and delete this. So we do that again. And click OK. So we have these two entries here. So because we're working with demo data, this is this link button. Okay. There we go. Okay. So uncheck the link button, so now I can manage each one of these individual transactions. And so from here, if you pull up 100, 200 of these, you can go through and select which ones you really want to write off. So we're going to go ahead and just transfer all of these. And probably what you can do it here, you can update your date. But I'm going to go ahead and transfer these to my payment journal. And then what you want to do from here is change this to a ledger account. So just update this and select select the ledger account. Obviously, it's not going to be bank fees, but we'll go ahead and use that and change this to ledger and put it on our account. And now we can go through, if we're wanting to do this in mass, this would probably be the easiest way to manage that. That way you just pull those all in, validate the transaction, and go ahead and post it. And that way we are crediting our customer account and we are debiting an expense account. So we're basically writing off those transactions. So if you're not doing it from here, the other way to do it would be within collections management. You can go in here and select your customer and pull it up, and you can write off transactions right within collections management. So easy way to manage that. And the process that we show for using the payment journal, you can also do that for, use that same process for accounts payable as well. So the next step, after we have cleaned up all of our transactions, hopefully you've done that or you're in the process of doing that right now. Now what we want to do is go ahead and post all of our transactions. And that may sound like a, you know, for probably dealing with a lot of accountants on the line here. You know, if you're at this point in your you have any open transactions, you want to make certain that they're all posted. So you're going through that process to post all the transactions. And yes, I have bank reconciliation in the post all transactions. It's just a placeholder to tell us, yes, you do have to have your bank reconciliation done by this point in time. But some of the processes you'll want to go through, make certain all of your receiving transactions are posted. You've PO invoice matched. Anything that's been shipped but not received. And this is going to be critical for our inventory closing. So we're going to talk about inventory closing. This is going to be a critical part of that. Packing slip updates, so anything that's been shipped, we have to make certain that we have packing slip updated any of those. We may have some that sat on the dock on December 31st, so we couldn't really invoice it, but we can show that that is packing slip updated at that point. So that will create a whole set of journal entries at that point. And then any of our sales invoicing. So we need to make certain that everything has been invoiced. All of our credits and adjustments that we just talked about. Then when it comes to the journal entries, we have our periodic entries, or also known as our recurring entries, and then post accruals. So just taking a quick look at that on the AX side. Let's just take a look at some of our accruals. So what you may want to do is, so I've got one already out here. Here's our periodic entry. So you just click on lines. And what you'll want to do is you create your new journal, come in here into lines, go out to your period journal, and select Retrieve Journal. And in this case, what you're going to do is select the period 2, and then select your journal that you're going to post. So some of this can take a really long time to pull in. Long time in webinar time. So I'm not going to pull this in here. But your choice at this point would be to pull in your journal number and then use copy. You definitely don't want to put in move because that will erase it out of your periodic journal. So at this point, you click OK, and it'll bring it into your journal. And you'll want to do that for all of your periodic journals. So you'll want to go through that process at year end to post all of your periodic entries. Additionally, any accrual, so we're accruing transactions. If you've built out your financial statements, you see that you have to accrue some revenue or accrue some expenses. Now you would come in here and enter them as reversing entries. So you select your end date. Account type would be ledger account. And then what's key in this process is select reversing entry and the reversing date. So you'll want to go through and enter all of those reversing entries as of, or accrual entries, I should say, as of the end of the year. So critical part of your year-end routine. Then also you have your allocations as well. So you're posting all of your allocations. So next step, I find this gets overlooked, and this part should be done early in the beginning of the year or at the end of the year, is to process your foreign currency revaluations. So you have the revaluations that are done in AR and AP. So where you go for that is in accounts receivable, periodic foreign currency revaluation. And then also under AP, you have AP accounts payable, periodic foreign currency revaluation. And they can be a batch job or you can run those manually. And what it does is it generates an update, or I should say a journal entry to all of your open, not settled customer transactions in their foreign currency. So what it does, it creates an adjustment to the AR control account and then an adjustment to the gain-loss account set up in the ledger. So whatever your gain-loss account is set up in the ledger, or whatever the gain-loss account is set up for your currency itself. So this looks at all your open transactions for whatever interval you're working in to run that, and it creates an update as a journal entry to your AR control account and your gain-loss account. And the same function is in AP. So when you're running any open vendor invoice in a foreign currency, it's going to revalue that transaction in its foreign currency as of the period that you're running it. Then we have our general ledger revaluation as well. And the key to this is that you have your main accounts set up that are identified as foreign currency. And this is the trick, that they also need to be identified as needing to be revalued. So you have to have a foreign currency in that main account, and the box needs to be checked to be revalued. Profit and loss accounts, the foreign currency transactions for the period intervaled are revalued. So when we select profit and loss accounts, we're selecting an interval, and it's going to revalue those accounts using the interval. Balance sheets accounts will use the balance at the end of the interval. Key to know those. If you're using different rate types, you'll need to update the types in the ledger. For profit and loss, you'll need to update the average rate type. So you'll need to go into AX and update those currencies for that period. So you'll need to pull the average rate, you'll need to pull the end of the month rate, in addition to all your spot rates. And what it's going to do is it's going to post the account set up in the ledger So it'll post to whatever main account that we're looking for, and then the gain-loss account set up in the ledger. And we'll just take a quick look at those settings here. So in our ledger, we identify our realized gain and our unrealized loss transactions, so accounts. So it's going to post to these based on whether it's a realized gain or a realized loss. In addition, the exchange rate pulls from this ledger setup. So we have the average set up. So when we run this process, so I'm in general ledger, foreign currency revaluation, I would select adjust profit and loss accounts and run this for a specific date interval. So I would need to make certain that my rates are set up for the average exchange rate. And just looking at the main accounts, what I was talking about in terms of the foreign currency in the revaluation, so let's edit this. And you can see I have this box checked, that foreign currency revaluation box is checked. And we're in Canadian dollars. So that's key to your setup. There's a whole day's worth of discussion on revaluation. And certainly we can help you out if you're running into any issues with end of the year revaluation. Actually, these should probably all be done at month end. But certainly by your year end, you should be closing, be revaluing your foreign currency. So next we have closed inventory, and there's a whole discussion on this, and my good buddy Frank Hamley has a good webinar on the inventory process, inventory reconciliation. I highly recommend that you check that one out. It's a good session. But this is one that trips a lot of people up at the end of the year. There's a lot of ins and outs on this. If you're running FIFO, LIFO, or weighted average cost, you're going to have to go through the inventory close process. If you are running standard costs, it's not necessary that you run the close inventory process. And what inventory close does is it settles, not closes, settles your issues to your receipts. Issues being a sales invoice. So it will settle the sales invoice to your receipts, which would be a PO receipt. But it only does the settling to those that have been financially updated. So financially updated means an issue is a sales invoice, and a receipt is anything that has been invoiced matched, so PO invoice matched. So the process is going to settle those issues to the receipt. So whenever you're posting sales invoices, you're posting those at the running average cost until you close the inventory. There's also a process known as recalculation, which will update the costs on your invoice to the latest weighted average cost, but that should never be substituted for your closing process. So your running average cost is used until you close the inventory. And what running average cost is, it is the total cost of your inventory at that time divided by the total number of units. So it's a real running average cost. So if you're using FIFO, LIFO, weighted average, you're going to have to go through the inventory close process. So we'll go back to AX. Let's take a quick look at what that looks like. And we'll go into inventory management. And under periodic, you have closing and adjustment. So here you would go into, if you're running a recalculation, you would click on recalculation here to run your recalculation. So that's going to adjust your current invoices to all of your invoices to the current weighted average cost until you close the inventory. But these are the processes for closing inventory. So the first process in here is you're going to check for open quantities. And what that's going to do is it's going to look at all of your receipts that have been posted and look at all of those that have not been invoice matched. So, and then it's going to look at anything that has been issued and determine what issues don't have a place to go to match up with a financially updated receipt. So it's saying here are all the issues or invoices that don't have a matching receipt. So it's really key to look at this to see that you may have some invoices that are not able to be settled to a PO invoice match. So this is going to tell you which of those invoices are orphaned that don't have a place to go. And this is why it's so important when you're posting all of your transactions, especially to do this in December or early in the month, to track down any of those POs that have not been invoice matched. I find it kind of odd that a vendor would not send an invoice right away, but it seems to be fairly common that it would take a couple weeks, sometimes even a month, to get an invoice from a vendor, and that can create a problem with the closing. So this will tell us any of those issues that are open when we do our closing. So you want to go through that process, check cost prices. What that's going to do is look at any variance, any deviation that we have between our item cost and any of our receipts. So if I have my item cost being $10, but I receive something in at $100, that would be above my maximum percentage deviation. So I would put in a maximum percentage deviation. This can be a little confusing because what it's saying is that from here I want to see anything above 50% deviation. So when I run this report, I'm looking for anything greater than 50% as my deviation. And so from there I would see anything that's an outlier in terms of a receipt cost or even a PO invoice match cost that's way out there. So I can deal with it. And then I can come in here and make an adjustment to it. So I can actually do my adjustments through here. And then our last process is the close process. And because this takes a while, I'm not going to process this. But we're simply just putting in our closing date and our total. I'm not going to go through this. There's a long discussion on this, but these are good settings here. But it all depends on what type of hardware you have that determines these settings here. But this is a key part to have in place, is to run the recalculation after closing. So this will take anything from your closing date to now and run a recalculation on those values. So once it does this, it'll create all the journal entries to update the invoice cost of sale. So it's going to look at all of your invoices, all the items on the invoices, and adjust cost of sales to the new cost. And it'll create the journal entries to do that. So we'll debit, if we have more cost, we'll debit cost of sales and credit inventory. And it will be for each transaction. After you're done doing that, you could come in here into this screen and you can print out all the adjustments. You can also, and I know there's nothing in this one, but you can look at each one of the individual transactions that occurred when you did the closing. So you can come in here and evaluate each one of those transactions to see how it impacted your ledger. all fun stuff. So as we're getting near the time to actually run it. So, but this is, these are some of the last steps in your closing process. So you'll have to reconcile your subledger to the general ledger. So seems like, you know, for anybody that's an accountant, we all know this, but you know, AX gives you some really good reports to be able to identify those differences, especially as you're looking at the general ledger reconciliation reports. Now, within inventory, what you're going to use is the inventory value report. So you're going to go into inventory reports, inventory value report, and that's a configurable report. Again, there's a good webinar on that whole process out there. But you'll use that report to reconcile inventory subledger to your general ledger. Now with accrued purchases, what this is received but not invoiced. So when you do that, you should be hitting a accrual account. So you want to be you'll want to be reconciling that account at the end of every month, and especially at year end when auditors are going to be looking at that. So you'll go to procurement and sourcing, report status accrued purchases, and you'll be able to look at what that balance is in your subledger and compare that to the general ledger. Now with general ledger, you'll have some really good reconciliation reports. And I get this question a lot, is why in the world would I have to do this if I am posting from my source transaction, why would the GL be off? And I don't know if I ever have a really good answer for that, why, but it seems like something always happens to cause it to be off. And by running these general ledger reconciliation reports, it'll tell you what the differences are. So for instance, with the bank, you'll have a specific bank report. So when you go to general ledger reports, reconciliation bank, you select your period, it'll tell you what the differences are between your subledger and your general ledger. Same with your customer, your accounts receivable. You can run that report and see the differences between the subledger and the general ledger. Same with accounts payable. And you'll also have some reports for sales tax as well. So let's just take a quick look at that. So I'll go into general ledger. And under reports, we have these reconciliation reports. These are really good reports. So under customer, you have customer, and you have sales tax by customer. So if you're reconciling sales tax, this would be a report that you can use. I get questions about the specification, open ledger, transactions. I don't see this used a lot. This would be if you have, say, for instance, a clearing account, and you want to match up clearing account transactions to, say, a balance sheet account. All it does is it gives you a mechanism to make certain that those match. It has no impact on the general ledger at all. And that's typically the question I get is, you know, what does this do to help me reconcile my general ledger? Really, it's nothing. It just helps you to manage clearing type accounts and match those up. So let's take the bank as an example. And unfortunately, I don't know if I have any differences in any of these, but we'll run it. And what you typically want to do when you run this, because this can take some time, is uncheck this box. So you just want to see it as a summary. So you want to see what's showing up first. So we're going to go ahead and take our chances and run this report as a summary. So if you have that box checked, you'll see every individual transaction, and it'll indicate whether or not there was a difference on any of those transactions. And we'll give that just a minute here. We'll come back to that in just a minute here. So the bank, you'll have accounts receivable, you have, and accounts payable. And really, when it comes to reconciling these reports should be everything you need to be able to reconcile. But I really highly recommend you go through each one of these steps first before you ever get into the actual closing process. Even though you can run it multiple times, you can run that closing process multiple times, it's really helpful to go through this prior to the actual closing process. And let's just see if that's popped back up. Well, in my my initial test of it, it ran a lot faster. So we'll take a look at that later on. So now we're down to the to this process called closing. So now we're going to look at what it takes to actually close out the year. The process is actually called opening transactions. So this is what we go through when we are want to close out our when we want to close out when we want to see our opening transactions for the new year. So it trips a lot of people up when we call it the closing process. It's really called creating our opening transaction. And so where we're going to go to do that is we're going into general ledger, periodic, fiscal year-end close, opening transactions. And what this process will do is it's going to balance forward your balance sheet accounts. And then it's going to take your income statement accounts and close those to retained earnings. And it's going to create all of your open balances for the new fiscal year. So you'll be able to see all those as open balances for the new fiscal year. This is a common question I get: what happens if you run this process too soon? Really nothing. It just depends on your settings within within your year-end close, how you see those transactions. If you're choosing to see net change, then you'll see a lot of entries in there. But you are, and I'll say this many times, you are able to rerun the process as many times as you want. Again, the settings will determine how these updates appear in your ledger. It's just a process. But what you'll have to do is anytime you make adjustments to the prior year, well, you have to run this process again. So it's not a one-time thing. So if you go back and make entries, you make audit entries, you will have to go back and run the process again. So you definitely don't want to run it too soon, but if you're ready to run financial statements for the year, for the new year, you probably want to have already closed your year. So let's go back into AX. And look at that, we don't have any data there. So after all that, so what it would show is that total transactions ledger, total transactions subledger, and whether or not we had a difference in there. So now we're in the fiscal year-end close. One thing that is in there is what we call the closing sheet. We get a lot of questions about that, although not many people use it. And what it's designed to do specifically is to create your adjustments into the 13th period. So it's designed to automatically post adjustments into the 13th period. So it separates it all from your operating transactions into its own period in the 13th period. So the way it works is you put in your closing sheet name and your adjustment, and you can do this. You can have multiple transactions in here. And you, from the general screen, you put in the period, and then the type, whether it's closing, opening, or operating. So in this case, it's going to be a closing entry, and we can run this prior to closing or after closing. It really doesn't matter. So from here, what we do is we click our closing accounts, and we load our balances. So I'm going to delete the existing accounts because I already have a transfer already in place. So what this does by clicking on transfers, this is like creating a journal entry. So what I'm doing here is I click here and then click on transfer, and I'm creating really a journal entry using the balances that are already that are already listed here. So typically where this is most used is at the end of the audit. We're giving adjustments so we can verify the balance and review what the transfer amount is, and then we can post those transactions into the 13th period. So that's what the closing sheet is all about. Now our opening transaction is actually the closing process. And another part that trips people up is that you almost expect it to be a little harder than it is. It's really a pretty easy process. All the steps that we talked about just now are the difficult parts. This is really the easy part. So we get into this process here. We can do this again as a batch. We can choose to manage our financial dimensions. Always want to recommend that you transfer all of your financial dimensions over. And we select our end date. And our balance accounts, you have two options here. You have reset, which for the record, I don't recommend you choose. And you have closing to opening. Reset really is telling the system, zero everything out. I will do it myself. I will create my own entry. So really we want the system to do it, so we're selecting closing to open. So we're going to take those entries and create our opening transaction. This defaults here, our main account defaults from our setup and our automatic transactions, which I'll pull this aside here. I'm sure everybody knows where that's at. So under posting, we have accounts for automatic transactions. We have our year-end results. So hopefully you're setting those all up. And when you get to this point, you should just be verifying that that account. And so now you're at a point where you click OK. And we already have a voucher, so I'm going to put in 3. Click OK. When I ran this earlier today, it took about 5 seconds to run. It seems like it's running a little slower right now. Here we go. So it has been created. So after we're done with that, we can go over to our trial balance and take a look at it. So I can select my parameters. I'll take 2012. Again, demo data, and we'll update it. So what we'll see here is you'll see all your debits and credits, and then we can look at our 13. You'll see should see your open balance at that point. So now if we go back to our parameters, so we see our opening balance, which is what we would want to see. And we see our closing balance, and you can display this in multiple ways, which I won't do. For this demo, it could take a while to populate. Then also, if you use anything other than main account, you can choose to separate those out into segments. So then when you export out to Excel, you can group it out. You can sort by your dimension. And just if something happens where those balances don't look right, you can actually come out to your financial dimension sets. And I don't think I have this in my slide deck, but you can come out here, click on your dimension set. So we'll take main account, and you can update the balances. So if it's not looking right, you can run that, and it'll update those balances. So it'll fix it if it doesn't look right. And now, just in closing, so now we're done. So our final process is, now that we've done this, you'll want to go back into those periods and make certain everything is on hold. So you'll want to check those, make certain it's on hold. Make certain that you update your number sequences. So what I've seen with a lot of companies is that they may have hard-coded their number sequences with a year. So it may have had 2015. You'll want to go back in your number sequences and update those. Make certain to remember to process all of your year-end 1099s. If you need help with that, we are certainly around to do that. We can help you in any of these processes. We're good at all this, so we can certainly help you. And then if you're using your date intervals, if you have anything hard-coded in there, make certain that you update those as well. So that concludes our webinar. I really thank you for your time, for joining us today. My contact info is right there. If you have any questions, you can certainly feel free to shoot me an email, or if you have any issues with anything, we are certainly here to help. So with that, I'll turn this back over to the man, Jason.
Thanks, Joe. Nice job. And like you said, we do invite you in the audience to ask any questions that you may have. You can use the Q&A block that you should see to the right of the slides. And we can give everyone just a minute to enter those in. So at the moment, I'm not seeing any questions in the queue. Well, Joe, you did leave your email address, so folks can jot that down. I want to also just remind folks we are recording today's event. We'll be sharing that online soon, hopefully. I'm happy to give folks just another moment here, and then maybe we'll start wrapping up. One other note, we do have a quick survey that will show up after the session closes out. We would really appreciate you taking just 15 or 20 seconds to answer a couple questions there about your thoughts on today's event. And you'll see that as soon as the session's over. So with that, Joe, I think we're going to start wrapping up. Thanks again for presenting today.
Very good. All right. Thank you very much.
All right. And I will also just say thank you to the audience, and have a great day. That concludes today's event.